Hello, everyone. Welcome back to our Switch Markets Live webinar series. I'm Shane Vernier, and today we're going to trade some key levels. We've got a lot going today. We're going to actually show you what key levels are, where to spot them. We're going to break down some of our favorite markets with our key levels, maybe some key levels that you should be looking at for later this week going into our CPI announcements on Friday. We're also going to take any questions from the floor that you want. We had some really a great Q&A yesterday. Went a long time, but it's my pleasure. I'm more than happy to answer any and all questions. I had some great questions that were actually emailed to me directly too. We had a few traders that are very accomplished that sort of hit a little bit of bumps in the road, and their issues were just a little bit different. But realistically, everything's solvable. I mean, they're very solvable. So I had a lot of fun addressing those questions as well. And I'm confident that we tried. Well, we tried. We tried to help as much as we possibly could. I'm confident we put the best foot forward, and you're going to see your trading as you move forward improve. It really will improve. There was a couple of folks. One had a great trade on, just didn't get filled up. The spreads went crazy, didn't get in on the trade. And I said, man, you got to just stay patient. I know it's hard. Believe me, especially when you've waited for the setup and you're waiting and then you don't get it. It's really hard not to chase price. So just stay patient. You're going to be great. You're going to get your prop account, and it'll happen faster than you think. To the other gentleman that reached out about the big question there was, how do I know how my progression is? I'm 2 years in. I've been trading for a couple of years. I'm not seeing the financial incentives that I had anticipated. How do I know if I'm getting to where I'm going? And we had a great dialogue. I wrote up a great big thing for him, ways to troubleshoot your trading, try to find out where you're losing, and correct those issues. Study your losses. So, I mean, essentially the answers to the questions were: one, be patient. Don't chase price. Wait for that next big setup to come to you and you'll get to where you're going. And the other one is you've got to figure out how you're losing. After 2 years, you should know which markets you want to trade. You should know exactly what your strategy is doing. If you're in between strategies, it's okay, but you at least know how the markets function. You understand price discovery. You know when you do best. You know your own psychological tendencies. After 2 years, you should know all of that. Then it just becomes, okay, why am I losing? Study your losses. Study your losses. Study your losses. Learn as much as you possibly can from your losses. Believe me, over time, the light bulb will go on. And personal experience, quick anecdote, then we're going to look at price, then we're going to get to key levels. The thing that helped me the most was understanding when I was at my most vulnerable as a trader. Now, when I was well rested and I had my analytics done ahead of time and I was ready to trade, very difficult to beat. Very, very, very difficult to beat. But when I was a young trader sort of growing, I knew that I was pretty good. But then when you get into the situation where you start losing money and you're scratching your head and you go, why am I losing all this money? Sometimes over trading got me, and it got me bad. Chasing price, missing a big trade, and then going right into the market following it. It will not work. You've got to stay disciplined. You've got to stay patient, but you've got to stay hungry. And as soon as I found out that typically when I started losing, it got worse, it didn't get better, I have a 2-trade rule. If I lose 2 trades in a row during the day, I'm out. I'm gone. That's it. Come back tomorrow and see you. So the first trade of the day for me is incredibly important. Now, if you remember, I'm not real big on Mondays. I'm not real big on Fridays. Tuesday, Wednesday, Thursday. Those 3 trades, those first trades out of the gate, Tuesday, Wednesday, Thursday, those are the most important trades of the week for me. And the beauty of this is, let's say I lose one. The next trade is very, very important. Very important. Now, if I lose 2 in a row, I'm done. That's a wrap. That's it. I'll see you the next day. I'll see you the next session. And what I found that helps me do is, number one, it helps me not go on tilt and blow out a tremendous amount of my capital that I'd spent weeks and months earning. That's a big one. And then it also helped me keep my head on straight and stay patient but hungry. Remember, the thrill of trading should be in making money, doing the analytics, executing properly. Give me a 5-level trader with 10 execution, and that trader is a hell of a trader. You don't have to be great. You don't have to try to be great. You could just try to be good. And what good is just take all the trades you need to take and avoid the ones you shouldn't take. Your strategy should spell that out for you precisely. That's what concrete rules are all about. That's what consistency is all about. So I want to start today's workshop or webinar with those thoughts, because I thought those 2 messages really reached out, and I really tried to address them as best I could. I think that I've been in both of those situations, and I know everybody watching this has been. If you've placed a trade, you know exactly what I'm talking about. And all I can say is stay patient, stay hungry, study your losses. Study your losses. Andrea Garwell, good to see you. Andrea, always welcome. Lita, always a pleasure. Lita, Tuku's back. All right. My daily crew looks like they're in the house. We're going to look at some key levels over in YouTube land. Team Marina, good to see you. Happy hump day, all. Happy hump day to everyone out there. Bible Tales for Kids, Bobby Bob, good to see you. Euro Great Britain pound, not yet showing bullish even after today's Great Britain news. Yeah, I mean, it's still right around that trend line, Bobby. We may look at that one or not. Just not much has happened. We had a nice big run, but just not much happened there. And then let me see. I've checked out quite a few. There you go. Yes, sir. Good to see you. Tina Jane. Consistency is everything. Hi, Tina. How are you? Consistency is what it's all about. Patience is everything. Be patiently consistent and stay hungry. That's all I have to say. If you can do those things, then you're going to be in great shape. If you get tired and you can't execute anymore, you need to take a break. Dave F19. Good to see you, Dave. Remember, even if you're an average trader, you don't have to be a genius. You don't have to be the Jeffrey Gunlock, the Bond Kings, the Buffetts, all these people that are famous you see on TV all the time, social media, all these people with millions and millions of dollars. You don't have to be that. Your system can be very basic. It can be very simple, but execute that. Give me a 5-level system with 10-level execution, and we've got something. Execute, execute, execute. What I'm going to show you today is the easiest way I think there is to trade, but it's also one of the most powerful, and people ignore it. They really do. They ignore it. I get laughed at all the time. I don't care. I know it works for a fact. So we're going to go over key levels in trading. I'm going to show you exactly how to do that. First thing we want to do, though, is get right out to price action. I'm going to recap these 3 trades. These weren't official trade ideas, but these were markets that a lot of folks were involved in yesterday. I got a lot of questions on them. Euro USD daily, beautiful level. Check out yesterday's stream if you want to reference these ideas. You can see that 78% Fibonacci level was a beautiful thing. Bounced right off. Was just an absolutely fantastic zone. I found that to be a very, very enticing trade, even though we did have a deep pullback. Now, remember, when the market isn't trending, sometimes those 62% and 78% are much more attractive than 38s, and I ignore 50s. I'm not a big 50 fan. So that's a Euro USD. Beautiful bounce off that 78% level. US dollar, Japanese yen. This is a beautiful thing right here. This is a 4-hour chart. We had this one pretty much nailed. There was your spike low. There was your spike high. Nice pullback right to this zone. Remember what this zone was? This is the 4-hour, and what was that one? That was what your monthly, 62% right there is an absolute monster. So if you're trading this, you need to be watching that line in the sand somewhere right around 150, 165-ish, somewhere in there. That is a big time level. This was sort of that accumulation we talked about. That worked like a charm as well. Great Britain pound, Australian dollar. This is fantastic. This is sort of one of those, you guys were watching the UK CPI numbers, I'm sure, as Bobby Bob just mentioned. This was sort of one of the moves that you're really interested in. Nice big dive right to 62%. This was a good one. I liked this one. Nice big daily range, spike low to a spike high, and we just hit home right around that, 2045 level, somewhere down in that zone. Absolutely fantastic, phenomenal zone. I really favor the back end of my golden zone. This market here, probably a little bit more attractive to try to trade a 62 or a 38. And then the Euro USD, very, very tight down there. So I was very happy with the way that those panned out. The levels really did seem to function properly. If you don't know what I'm talking about, don't worry. That was just a little something from yesterday. One other thing to do, and then we're going to go ahead and get on with the webinar here. And once we're done talking about some of the market structure, or some of the concepts here in these key levels, be sure to ask me about any market you want. I will cover those toward the end of the stream. As far as trade ideas go, we still have the gold trade idea, which is in play. Technically, it's still in play, and we may get it. We may get a chance to buy those 39.93s somewhere in there, or 39.81, something like that. And then also WTI crude oil. Bit of a bump today, but you'll notice that you haven't really given back much of the gains. But until we threaten 60 or trade over 60, I'm really not too concerned. I believe we're washing out retail shorts right now in the WTI market. Okay, let's take a look at a few things first. Remember, if you want to trade anything you see here today, head on over to Switch, get you lined up and see exactly what bonuses you're eligible for, what kind of account is best suited for you, and also they've got thousands of accounts. They've got really anything you need. Switch has it, so go ahead and check them out. Free demos, free MT5 demos, and all sorts of trading tools. So right behind my picture here, if you go to the website, there's going to be a little drop-down menu. Let's go ahead and give that a click. And this was just sort of recently, our resources offerings have really been boosted lately. So right here, free trading tools is one of the things that have definitely been on the board for us, and they've been fairly Yeah, fairly well received. So we've got some materials coming out. Yesterday I showed you how to use maybe some of the lot size calculator, but you can see all this stuff: forex profit calculator, lot size calculator, economic calendar, currency strength meters, all sorts of things, market heat maps, Cager calculators, forex compounds. There is just an absolute ton of stuff there, and that is just the tip of the iceberg. There's also free EAs and anything you need there. So be sure to check that out. If you want to, you can certainly do that. All right, key levels in trading. What we're looking at today is the concept of the key level trading. I like it. I like it a lot. It's one of my favorite ways to trade, and the reason why is it's reliable. Now, if you haven't seen this video here, you head on over to How to Trade on YouTube. We just hit 20,000 subscribers the other day, which is pretty cool. So if you want to go ahead and check out the actual video here, it's going to be under our video section on that YouTube channel. And there's a tremendous amount of strategy things that you can look at here. I think it's an interesting channel, but a lot of strategy stuff. The idea is that we're going to show you strategies so you can be creative and maybe adapt them to your own personal strategy. 5-8-13. A lot of people really love that one. ICT kill zones, compound trading using AI. We've got a lot there. So your key levels are going to be way down. I made this one a long time ago, and in any case, it's right there about a year ago. So if you want to check that video out, go ahead. It's only about 9.5 minutes long, so it should be pretty good. Pretty good tutorial to get you up and running. Now, what's a key level? A key level is a technical area, okay? A technical area that's going to draw participation. It's going to attract buyers and sellers. And the reason why it's going to is because it's going to be probably perceived by the public. It's going to be obvious on your charts, and it's going to it's going to attract opinion makers, people that have an opinion. Now listen, as traders, we're not supposed to have opinions really. Are you bullish or bearish? We'll see what the market does, see what the technicals say. But a key level is an area that's pretty obvious to people, no matter who, you, me, you, whoever. And we all have an opinion on a key level. So I'm going to show you some examples of that. There's a bunch of different types. But remember, the big thing about key levels is it attracts participation. And a lot of traders get lost in that fact. They don't remember that, okay, is this level going to attract participation? Is it obvious? Are buyers and sellers going to have an opinion here? And the reason why all that's important is when people have opinions on levels, or machines have opinions, nowadays AI, when AI has an opinion on a level, orders are going to hit the market. And when those orders hit the market, you're going to see participation spike, traded volume spike, and volatility spike. And those are the areas where we can really crush it. We can really crush it as retail traders. It's absolutely imperative that we understand where our key levels are. Now, they are pretty easy to find, and I'm going to show you how to find them. There's a few different ways to do just that. So different types of key numbers, key levels, key numbers, whatever you want to call it. Back in the pit days, the old pit, Chicago pit, New York pits, they would call them key numbers. What are your numbers? What numbers you got today? Shane, how do you know? You didn't trade in the pits. I go, yeah, but I came up with guys that did trade in the pits, and some of the stories were fantastic. But that's how they talked. You know, they key numbers. What's your numbers? What's your number today? What are your numbers? And I go, okay, my levels. I say key levels because we're in the digital era now. Back in the day, though, it was key numbers. Key levels. So what are they? Big round numbers are the first type, and those are going to be like your $50 crude oil, your $100 crude oil, 25,000 in the NASDAQ. Big round numbers that are obvious to everybody. I view big round numbers as being a huge market driver. These are called areas of natural support or resistance. It's very important that you understand that. Big round numbers, don't ignore them. Remember, everything we do, we're in an auction format. We are participating in an auction format. You're going to buy something. I'm going to sell something. You and I are going to have to make a deal on what the thing's worth. That's an auction. Every day in front of our screens, we are building markets. We are part of an auction. Right now, the Dow Jones Industrial Average is off 255 points. The sellers are beating the buyers. That means that what? Maybe the market right now, the sentiment believes that it was overvalued and now price is coming down. Now, when we get a key level involved in that process, key levels can, big round numbers, can be the top, the bottom. They can dictate a lot of policy. They can force consolidation. Very, very important to know big round numbers. That's number one. And I'm going to show you exactly what all these things mean here in just a second. Trend lines. Trend lines are another good one. Now, the thing about a trend line is everybody can see it. And we're going to draw some trend lines today. They're relatively simple to draw the way that I use them anyways. So a trend line can be a very, very important area because there's a tremendous number of trend line traders, and they can all build trend lines, and typically they all look the same. Now, not necessarily perfectly. Okay, I'm going to give you that. but essentially you're either connecting swing lows or swing highs, and basically it's very, very obvious where those trend lines should be given a specific time frame. Now that's the other thing we're going to talk about today too, is time frame. Technicals. Some technicals are going to be obvious. I use Fibonacci retracements. Believe it or not, if you're not hip to Fibonacci's, they're extremely popular and they're used by a lot of traders out there. That's why I like Fibonacci's. They do give me some good, powerful key levels. Some of the technicals, though, like a 50-period moving average, like a 200-period moving average, those are key levels. All right, everybody pretty much knows and we're going to go over this on a share of Tesla, where the 50-day moving average is, where the 200-day moving average is. So those areas can also be incredibly valuable as well. And then the previous day's highs and lows. Now, previous days' highs and lows are big. Previous weeks' highs and lows are big. Previous months' highs and lows are big. Previous years' highs and lows are big. Now, why would those areas be so important? They are key levels because everybody's going to have an opinion about where the market stands with regards to where it was yesterday, last week, last month, last year, last decade. We all have an opinion, and as long as there's an opinion there, the money will come to the market because some people believe we're overvalued. Some believe we're undervalued. That moves it. That helps us make money. All right, let's go take a look at a few of these in practice. And then any of your questions, I imagine like 3 live chats, so just be patient with me on the questions. As far as a good basic look at what a key level is, I've got the US 100 level. I've got the US 100 market right here, the NASDAQ 100, sort of outlined for you. And we've got examples of a lot of different kinds of numbers that we just talked about. Right there, a big round number. 25,000. That is a big round number. Okay. What did we see around 25,000? It was incredible resistance, a lot of compression there, and then we broke. Then we sold off big, and then we retested. We failed and came back down. Clearly, 25,000 generated volume. It helped traders have an opinion on what was happening. No question. Now, previous day's low. In the NASDAQ US 100, you see real tight session on Tuesday. What'd you have right there? Big sell-off beneath previous day's low. Why would that be important? Very popular place to put stop losses. A lot of folks probably showed up and went long on the electronic open, stopped themselves out under yesterday's low. That's one strategy. You have to have a lot of money to play that strategy. A lot of traders do it, though. You have something like that, which, okay, you could have some stop loss locations there. You could have some traders that want to sell the NASDAQ, and they say, okay, listen, as soon as this 3-day symmetry breaks, I'm going to pile in underneath that low and go to the short. So that in that case, the previous day's low was very important. It got washed out. It washed out all the retail longs that were sort of following the macro trend here. It was sort of a trend buster, I guess you could say. And then the other thing was it kicked on all the momentum players that said, listen, I want to be a seller underneath yesterday's low because I believe a correction's coming. So in that case, it brought us some money now, or brought the shorts money. It didn't bring us any money just yet. But right here, what else did you have? Well, you had a previous day's high, which is right up there. It's also an all-time high. All-time high is up there is 25,205, right? Okay, so an all-time high is going to be a key level, especially the longer that it sits there. The prima facie evidence is right in front of you. Back on October 9th, you had sort of a previous high up there, 25,191, 25,2, sort of tested that level and then plunged. And then what happened here? You tested it again, and now you're coming off again. Very, very important to understand where all-time highs are at all times. Now, a lot of times, you don't deal with them very often. Now, an all-time high, we've been making all-time highs literally every day on gold, every day on silver, stocks. So right now, we're sort of in an interesting era of finance. We're not really ranging underneath an all-time high. We haven't been doing that since the COVID recovery. This has really just been boom, boom, all-time highs for pretty much everything out there now, except for the U.S. dollar. That would be definitely the exception to the rule. But commodities like gold, silver, stocks, Bitcoin, things like that, all-time highs are a very important key level. So always know where those are. And remember, the longer that they sit there as the all-time high, the more likely they are to act as potential resistance. Same with all-time lows. Now, we haven't dealt with anything all-time low in a long time, and typically you don't see that. But like a yearly low, those are huge. Monthly lows, previous month's lows, those are all big-time key levels. Everybody's going to have an opinion and want to trade there. And that's all we're looking for. We're trying to get into the market at the best time for us to make trades. That's it. And typically, those times really revolve around key levels, especially if you're a scalper, a tick scalper. You've got to know where your levels are. If you're a trend trader, maybe not so much, but if you're a breakout trader, absolutely. A lot of trend traders love big key levels. A lot of them were getting in down here in the US 100. They were bidding 23.4s, going, we're going to 23, or we're going to 25, and they were absolutely right. So key levels can be targets, they can be stop losses, they can be entry points, they can be a lot of different things, but to ignore them is a major, major, major mistake. Major mistake. Oh, we got some more comments. Sorry, guys, I got way behind there. Let me see. Team Marine, emotional intelligence. If you've got emotional intelligence, you've got a chance to trade. You do, and I've been guilty of just not being very good emotionally from time to time, and that's sort of a drag. But over the years, these things will pop up on you. Just recognize the issue, solve it, and see in some hard time. Yeah, it's very hard. Let me see. Be consistent in watching your streaming every day. Thank you, Tina. I appreciate everybody that shows up every day. I do my best to try to bring some ideas and concepts to the table here. That's a good look at some key levels. Now, as far as, let's spot a few. Okay, let's spot a few. This is Tesla stock. Everybody should probably know what's going to happen in Tesla today, right? What's going to happen today? Earnings. That's a big deal. We're looking for a topside beat of about 55 cents a share. Revenue is going to be right around $26.5 billion. A lot of folks are saying, hey, we're going to 600, right? So let's just look at this daily chart and say, okay, Shane, I need some key levels. I'd say, all right, well, let's get you some. The first key level that jumps off the screen at me is what? It's going to be a big round number. Now, these are beautiful because they're easy to recognize. 500. So remember, we're gonna paint with broad strokes here, but you dial these in exactly. So $500 Tesla. I guarantee you that everybody in the world has an opinion on what Tesla's worth, if Tesla's worth $500 a share or not. The analysts do, the retail traders do, everybody does. That's huge for us. That's going to be huge for us. Why? Because we could either be taking a long here at 432 and going into that earnings, believing we're going to get a pop, and maybe we just hold out and we're shooting for 500. That could be something. We could use a CFD product to go short right in front of 500 and maybe play a counter trend scalp. I love that idea. A lot you can do with key levels. Now, what would be some other examples of key levels here? I mean, they're all over the place. You just got to really look. Would 450 be a key level? What is it? It's a weekly high. I'll probably take a look at it. Absolutely. What else would be a key level? Last week's low. So right there, you jump from the 10th to the 13th. So this would be the monthly low, the current month low. That may potentially draw some bids. That may be protected. We could step back and we say, what about this gap right here? We're not talking gaps today, but realistically, what about that area, 400? Would 400 be a key level? You bet. 400 would definitely be a key level. How about yesterday's high and low? 100%. There's yesterday's low right there. Boom, broke hard. Looks a lot like the NASDAQ chart, doesn't it? How about this? Let's go to our weekly. What else could we put on there? Right, weekly high, we sort of already have identified that. Last week's low, somewhere down in there. Let's say we get a big retracement today. You think you're going to get some bidders down there around last week's low? I think it's possible. I think it's really possible. Is it as important as it was? No, of course not, because we already violated the top side. But still, it's worth putting on your chart saying, okay, we're coming up on last week's low. How about monthly? Monthly high, right? Last month's high, big bullish month. How about last month's low? You could put it up there. I don't think you need to worry about it. All right, what else? How about yearlies? Especially if we're stock trading. Is it a coincidence that last year's high is at $488, right around 500? No. The seller stepped in and defended 500 with vigor. I would be watching this area very closely. All-time high, 488. Key number 500. If you guys remember our silver analysis, that may potentially be a launch point. That's why a lot of people are calling for 600, something like that. All right, so let's go. Let's take this back down. So we've got all these levels now that we just marked, and I didn't label any of them because we don't really have time to do all that. But you can see the way that they're all spaced out, right? So I'm looking at my daily chart here for Tesla, and I'm saying, okay, What else could I use indicator-wise that would give me some key levels? And let's just stick with probably the most common stock analysis out there. Let's just go with a couple of moving averages. Let's make them simple moving averages. So where are we at? Moving average, simple, boom, boom. Let's hit 2 of them, and this is easy. We're going to go with the 50. Let's go right here with the 50 moving average. Let's make it red because I like red better for my shorter time frame or my shorter durations. We're going to go 50 right there. Source close, everything's the same. Okay, that's my 50. Let's go back to right here. I want my 200. Very, very common way to trade stocks, the 5200. Essentially, this is how many technical analysts view their stuff. So where's the 50 and where's the 200 at? Okay, way down here. You got the 50 crossed over the 200, sort of predicted this major run, and now we're sort of moving sideways, right? But take a look at what you have here. Sort of this zone, this 399 zone, that gap area. Would that be a key level? Maybe. Look at where your 50 is. Your 50's cruising right up there. If you get a pullback, I mean, that's a prime bid from 400. Not to mention 400 is a big key level itself. See how everything fits together? I know I'm moving fast, and a lot of these concepts are second nature to me. And if you're brand new, you're probably confused. But what did we just learn from all this key level stuff that we just went over on Tesla? Okay, we have a market driver today, which is earnings, right? So we know there's going to be volatility. Where's the best buy on the board? 50 period simple moving average, 50-day simple moving average, 400 is the level, gap zone. That's probably the best trade on the board, in my opinion, for a buy. What are we playing right now? We're trading, 43, 431? That's doable. You can see that pullback. All right, so what is that, a pullback at 9%, something like that? You get a shot down there at that key level, then you got a real chance. Now, as far as what do we have to the top side? What do we know up there? We know that if we break, we're going to have an all-time high at 489. So if nobody protects that all-time high, right beneath 500, we see a little compression. We could easily see a big-time break up above 500. We know all of that just because we looked at key levels. Now, are the rest of these that important? Probably on an intraday scalping basis. You're going to see yesterday's highs and lows and things much more important on your forex and commodity futures pairs. 100%. I can tell you with commodity futures, you have to know where the previous session's highs and lows are. You have to. You have to know the weekly highs and lows as well. There's a tremendous amount of volume that enters the market at those levels. So we started with nothing, and now we've got Tesla, right? We've got it nailed pretty well. We know how to trade it. We already have a game plan. We're buying 400s, somewhere down around 400s. We're probably going to be skeptical. We'd probably like to sell up there, somewhere just short of that all-time high, but we probably need to be careful with that because if we get a break above that high and then we gap up above 500, we could see a major break. We could definitely get a gap here on tomorrow's open. So a lot going on here, but we have a pretty good roadmap of how to trade it. Let me see. Tina, that is so interesting. You're like a detective. Well, the way that I was taught to trade, and not many people really that were taught this, but my uncle was he was a big shot. I've been over my background a lot and made the money that we all want to make, and he made it on Wall Street. He was a big shot back in the 80s and the 90s on Wall Street. And when he was teaching me to trade, he said, we're always looking for evidence. We want prima facie evidence. You need to gather, when you make a trade, you need to build as strong of a case as you can to make that trade. And so when we think in those terms, it became sort of, he taught me we have technical indicators, but the way we interpret the indicators is pretty discretionary. It really is. Now you got your keys and everything, your risk management, all that's dialed in. That's all systematic, but actually reading a market, it's sort of, the way that he taught it was more of an art form. Now I'm not saying that that's the way you have to trade, but the way that I look at it is we need to build a case to see which trades have the most chance of success and which don't. Converging indicators are huge. Being able to read market state, trend versus rotation, that's huge. That comes with time, and we have indicators we can use to help with that. And then also just being able to interpret the news cycle, that comes with a little bit of a experience, but you can learn that relatively quickly. So there's a lot there, and there is a little bit of detective work, but it's a lot of fun. It can be very rewarding. Okay, so let's go ahead and talk about how you can trade these levels. All right, so there's a couple different ways that you can use these things. Strategies, you can view them as support and resistance levels. And we sort of just went over that with Tesla. We probably resistance, Probably looking maybe to sell up there right around 500, something like that. But I would be very careful doing that. Maybe we wait for a little bit of a confirmation there. We talk about confirmation in the video. Maybe we get a hammer formation, a daily hammer up there or something at 500, and then we short it. Something like that. Support level down there right around 400 I think is pretty strong. Nothing's guaranteed, but that's a pretty good trade, and you would like that as a support. So that would be a buy, an opportunity to sell from resistance and buy from support. That would be one way to use key levels. Another way is for breakouts. Breakouts, basically you get a little compression in front of a key level, and then you could buy the breakout or sell the breakout. We could probably look at one of those if I can find one here. And then reversals. You're playing just a reversal off of a key level. That basically is what we're seeing right now in the NASDAQ. A lot of players are selling 25,000s because they believe that the market is topped out at 25.2 or whatever it is, 25.280, something like that. So reversals. So you'd be selling off a resistance, buying off a support. Support and resistance, I like that more as a scalping type of a thing. And then breakouts are great. Compression in front of a key level, looking to buy above the break, below, sell. Let's see if we can find a few examples of each here in the market. So this is a gold market. This is probably the most scrutinized market in the world right now. If not, it's one of them. So we look at the gold dailies. So our key levels, relatively straightforward. For me, to the top side, we're going to be looking at what? Top side, we're going to be looking at probably 4,500. That's going to be a big round number. That's natural. That means that we don't use any indicators, and price has not touched that yet. And then we're going to go ahead and hit 5,000. That's a key as well. Like I've said in the past, I love the quarter handles. So I'd probably be looking at 4,750 as at least being a secondary big round number, but definitely one worth looking at. So those areas right there are going to draw two-way action. We're relatively certain of that. So what are we doing right now? What other key levels do we have? Well, we've got some all-time highs, which we sort of formed a triple top, and I believe that high right there came across the board on Monday, and you're up there right around 43.81, right? So 43.81, something like that. That's going to be a key zone up there. Now, the thing about those weekly highs and weekly lows, previous days highs and lows, you need to be exact. You need to be exact. And like these key levels, there is no reason to not be exact. You've got the print right in front of you. It's just a matter of reading the board and making sure that your level is perfect. That's going to be very important. Like this 45.02, that's not good enough. It needs to be 45 even. That's absolutely imperative. Now, these areas, we're going to treat them like areas when we trade them, but in order for us to really know where they're at, they need to be exact. There's no excuse not for these not to be exact for you guys. When you're marking your key levels, make them exact. If you don't, it's just lazy. So you got something like this going, okay, we've got a top in there. What else do we have here potentially for gold? Let's go ahead and go to a previous week. So what do you think? Is that area important right there? Previous week's low, 4,007. What's this week's low? 4,004. You bet it was important. That's a big time bounce of almost $50, $60, right? That's huge. Why was it there? Couple of reasons. Number one, last week's low. You bet there was players looking at last week's low. What else was there? 4,000. And this sort of takes me back to what I was saying at the beginning of the stream. The trader that reached out to me said, hey, I had buys in the queue at 4,005 for gold. And that thing, the spreads went crazy. The fill didn't occur, which is really a shame because I feel your pain. I've been there. Wait for weeks for something to set up, and then you don't get the bump. You don't get filled. But why? Why was this important? Last week's low was what? Right around 4,007, and you've got a big round number, a natural number of 4,000 there. That's huge. That's a big time zone. So you've got last week's low and 4,000. You know there's going to be something there. It's either going to wash the level out completely or you're going to see some bidders step in. More than likely, you're thinking support. You're thinking a support level. Why wouldn't you be? 4,000, we broke above it. Now we're coming back to test it. We're in a bullish trend. Definitely. You're definitely looking at that as being his downside support zone. So that one's pretty easy, really. We talked about 4,000 yesterday. We've got a trade idea down here at like 380 something like that, 377. I'm still there. We're still there waiting. But this zone right here is definitely important. But that's a great example of how a key level got you into a great buy. 4,000, big round number. Okay, so that was a pretty good look at the gold market. As far as, what else could you really outline and build? You can take these things as far as you want. How about last month's low? Last month's low is down there at what, 38.19. Interesting. Or excuse me, this month's low, which is soon to be next month's or last month's low in a few more days. So that's going to be one to monitor. You can also see last month's high. Do you think that means anything anymore? No. We already blew through it. That's gone. How about last month's low? You can mark it if you want. Probably not going to come into play. If we get in a major sell-off, what's it right around? 34.28, 3,500. Key levels can really help you figure out what's going on in the market and where participation is likely to come in. Definitely. So that's a good example of just outlining some areas there that we may want to be looking at trading. Now, how does that help you, like, let's say on an intraday trade? Immensely. So we've got some key levels down. Let's go ahead and go to a 4-hour chart. Guys, we don't have any indicators on our chart. We don't have any indicators on our chart. What is happening here? Now, a lot of the ICT traders out there, and I don't blame anybody that's an ICT fan and they love liquidity sweeps and all this stuff, but realistically, what happened right there? What's your low? 4,004. What happened? That right there was your sweep beneath last week's low. Remember, we have last week's low here, and then we got 4,000 there. Boom, right there. So to say that these things aren't really useful on an intraday basis is very, very, very naive. The short-term action is often dictated by these longer-term key levels. And when the market goes to these zones, typically you see the flood of volume and then the action. Let me see if I can prove it to you with a gold futures contract. Okay, gold futures. Got something real similar here. Let's go ahead and just back it off and mark a few key levels. Let's mark our key levels and see where we're at. Now remember, futures are going to move a little bit different than spot. Your levels are not going to be exact. So what last week's low was right down there where 4,011. It's going to be a little bit different. And then also, what else did you have down here? You have 4,000 even, which I would definitely be keeping an eye on if I was trading that futures contract. And am. And I am. So 30-minute chart, what do you have? Haven't quite tested it yet. You can see that right in here, the bidders have stepped in and sort of protected last week's low a little bit. Interesting. You'll notice that the volume's picked up, early in the session, early in the U.S. session, but still, that right there is the Wall Street Open. Typically, you see the volume increase right around 8 o'clock, 8 a.m. Eastern, 6 a.m. my time. You start to see the volume go up. But this right here, interesting. You came down into this zone and the volume kicked up. Even though it was negative, you still saw the bidder step in, and then it sort of died down. So there's a lot of traders watching that zone, last week's low and that 4,000 level. Let's try something else here, see if we can spot a rush of volume or a flood of volume. How about yesterday's low? This is a big area for the futures contracts. Definitely, if you're in the futures market, you need to know this. Your low right now is 4,093. So let's dial it in exactly and see what happened. Okay, right there's the low. Let's go down to, say, a 5-minute chart and see what happened. Okay, this is pinpointed right here. That's yesterday's low, 21st of October, about 10:40 a.m. Eastern. Or 10:45 a.m. Eastern. There was your low right around 4,093, right? Take a look at what happened right here. This is a key level. This is vintage key level stuff right here. 21st October, 6 p.m. What happens at 6 p.m. my time, 8 p.m. Eastern? Tokyo Open. Tokyo Open right there, it was on. Trading gold futures, and then right here, what happened to the volumes? Volumes exploded. Negative, then boom, the bidders were there, and they were there in a big way. All of that had to do with your key level. What was your key level? Previous day's low. I could show you examples of that stuff all day long. Understand key levels. Very, very important. Very, very important. That's for sure. All right, everybody. There's a couple other things that I don't know if we got any time to cover. There's any markets that you want to look at, I'm more than happy to give you my own take on them. As far as what we're looking at, that's key levels. That really is. I mean, I could show you the nuance of that stuff all day. Just remember the types of key numbers. Just go through a chart like we had, pull all your indicators off of it, and just look at price action and go through and start spotting key levels. Big round numbers are huge, especially in trending markets. Right now, the big round numbers to the top side are everything for stocks, for gold, for silver, for Bitcoin. A very, very big deal to the top side. Trend lines, we didn't even draw any trend lines today. Maybe we'll do that some other time. But it's definitely it's one of those disciplines that sort of you can interpret a lot of different ways, but if you just have 2 points you want to connect, you pretty much have a trend line. And if you're using the right time frames, your weeklies, your monthlies, your dailies, you're going to have a fantastic trend line everybody's going to see. That can either be support or resistance. We'll talk about that some other time, though. That's sort of an in-depth, probably its own workshop is going to be trend lines. And then previous days highs and lows, weeks highs and lows, months highs and lows, years highs and lows. Absolutely. And also within that, highs and lows, all-time highs and all-time lows. You got to know where all that stuff is. We could go into the overnight stuff, the overnight highs, overnight lows, but you sort of have to preface that for which session we're going to trade. So you definitely, if we're trading the U.S. session, then you probably need to know those too. But that's okay. That's for sure. All right, everybody. As far as things to look for the rest of the week, remember the Tesla's a big deal today. Let's go ahead and pull up our 920 EMA crossover strategy and see what the coded 920 gives us on Tesla. Okay, you see we sort of had a signal to bid, back here, way back here in August. It was a good one, up about $100, 33% a share. And now you're starting to get the opposite thing going. Opposite thing, we're starting to get maybe a cross under developing. This could be an interesting day for Tesla. Remember, those earnings come out. You're looking for, a top side or an earnings beat of about 55 cents a share, and also top side revenue is going to be $26.58 billion, which is a lot of cash. That's a lot of cash for Elon and company. That's for sure. All right, everybody. I think aside from Tesla, just keep an eye on your gold and silver. Silver is really showing us something. I mean, when we start looking at silver here, let's just go ahead and pull up a 4-hour silver chart. Incredible, just an incredibly volatile market. No question about it. Major plunge. Now you're sort of coming off. What do you want to do with silver? I still want to buy it. I really do. It's just a question of how we get in on it. Top side, you're probably looking at the top side, the all-time high right around 55-ish. That's going to be your key number to the top side. You can see we broke beneath last week's low and have really flushed things out. I sort of put it out on X the other day that the trade of the year potentially could be like right down here at 45. We break down into that golden zone. That could be just an astounding long side entry. That's for sure. So I'm watching that closely. I think silver is going to be a real comer here. As far as the rest of the forex goes, not a whole heck of a lot going on. I mean, the U.S. dollar just off a little bit, but it's seesawing back and forth. Stocks are starting to tank. I mean, I guess that you remember last week from our Fibonacci time zones, we have a key level marked there, 47.5. It's absolutely. But what's the biggest probably key level in the world right now? 50,000's coming into view for the Dow Jones. It's only, another 3,500 points away. That's going to be a major level. Right now, we're sort of slugging it out around 46.5, something like that, or 47, something like that, 47.5. This right here is going to be a much different scenario when we get up to 50. There's going to be a lot of traders picking that as potentially a top, maybe even a top for the Trump administration. Interesting times. So we've got 25,000 in the NASDAQ. What do we have for the S&P 500? Right now we're trading at about 66.5, something like that. What do you think the key level here is? I would say 7,000 for sure. 67.50. Obviously. Quarter handles. Think in terms of quarters. 25.50, 75 even. Even 25.50, 75 even. Think about it that way. It's 52, and then you're probably going to have, a 75 in here somewhere, something like that, 7,000, and then you're going to go 72.50, 75, 77.50. So we're at really some serious long-term inflection points for U.S. stocks. As far as Bitcoin goes, I think we all pretty much understand how Bitcoin's working. We got pretty much a buy. I mean, we were going long from about 107 and a quarter, I think. It's a pretty darn good level down here. If you want me to show you, I can show you the Fibonacci's on the monthly. You'll see right in this zone. Beautiful market structure, nice big break, and we have just been flat. Huge month. What happened? Tariff, trade wars, Bitcoin goes crazy. Now all of a sudden we don't have the rare earth minerals to build the chips, to build the AI, to trade the crypto. So now what? Who knows? I know that 106,670, that's a nice Fibonacci trade, sort of a proportional trade with the prevailing trend. Is that a key level? I think we can look for more obvious things than that to be our keys, but I like it as a potential alongside entry, that's for sure, just to follow the trend. So if we're picking out key levels in Bitcoin, what are they? We nailed the first one, was 125, no question. What's the other ones? 100. We saw a lot of business getting done like at 110. Is that a key level? Probably not so much now, just because it's been traded repeatedly, but 100, better have 100 on your radar. We haven't traded 100 in quite some time. 125 to the top's big. As far as what could you be looking at, even past that into the future, 150, huge. 175, huge. 200, huge. What do we think happens if we break above 125-ish? So right here, we've got 125. We're talking breakout trading, right? We're trading right in here. We're testing. What happens when 125 goes eventually? The pressure's relieved off the market. You blow the top and probably go to your next key level, 150. Does it happen fast? It could. But all along the way, you have sort of bumps in the roads, what I would call them, 130, 132.50, 135, 140, 145, things like that. But still, 150, probably going to be a lot of people's top side target if we break out from 125. And the reason why we say things like this is because when we look at our gold market, especially on the monthly, feel free to go back and watch some of the streams from over the summer where we had this compression pretty much nailed. We had the bullish flag, trends up, sideways trade. We had 90 days of sideways trade. What was the key level there? What was it? It's 3,500. 3,500 was the key level. Boom. There's your all-time high right there. 3,500 even, and then compression for 90 days. We just sort of ran around in circles between what? What was the top side? 3,500 and maybe 33. We just ran around in circles, and now look what happened. Once that pressure left the market, it's all over but the crying. We talked a lot about we're going to 4,000, and now the markets are saying we're going to 5,000. Are we? Maybe. We'll see. We'll see if we get there. But you could definitely see the roadmap ahead with your key levels. And now if you go right here to Bitcoin, what do you have? What do you have developing aside from all those scribbles? You have a key level that's huge. By 125. Don't ignore that. That's big. Is this the same? No, it's not nearly as pretty and consolidated as gold, but it's sort of a more volatile market. But we could build a case that this is sort of a compression zone for the last 1, 2, 3, 4. The ranges are bigger than gold was. But what about this? Is that a bullish flag? If it's not yet, it's getting there. So, I really like this market to really load up and then potentially make a big move north. And I think the fundamentals are there. I really do. I think they're there. Okay, guys, let me see. T. Marina, let's see. You have a question? Yeah, absolutely. T. Shane, can you show an example of a strong resistance support area versus a weak area? Yeah, absolutely. So what I would recommend as far as strong versus weak, if you want to look, best way for me to show you this is to go back to the gold futures. Absolutely. So I would use a time frame. Time frame would be everything for me. The hierarchy for me would be monthly, weekly, daily. And then when we get into intraday time frames, we can certainly do the intraday sort of crash course right now. I could show you ones that are not nearly going to be not nearly as strong or weak. Okay, pretty much all technical analysis on YouTube that I've seen is, 5-minute charts, 1-minute charts, 30-minute charts. I focus on the longer stuff, the key levels, because the longer the time frame, the more valid the level is, typically because it's been on the board longer and everybody can see it. Everybody in the world knows where $125,000 Bitcoin is right now. Everybody. So that's what we're looking for in a key level. When we get down to these shorter time frames, like a 30-minute, I could sit here and say, okay, what do you want to do, Shane? How do you want to build out your key levels? And I'd say, well, what are we looking at here? Well, we got to look at the daily high or daily low. So let's go ahead and look at the session low. 4,025. That's interesting. So you got sort of your New York session low right there. What did you have here? That would have been yesterday's low, 6 p.m., or that would have been this session's low. So that's right there on the Tokyo Open, so something like that. So what would we say? Is this a strong level or a weak level compared to a daily, a weekly, a monthly? Probably going to be a bit of a weaker level. But it's listen, these things can still work. That right there was your liquidity sweep. All the ICT traders are going, yeah, right there. We just played it to the long and made a fortune, and that's great. But what was the level here? The low was right down 4,021, right? So 4,021, you could say you're right in there somewhere, something like that. That's yesterday's low, essentially. Well, it's actually gonna be today's low because it's right after the electronic open. That sort of gets us into a long discussion, which is with most things trading. There's always nuance. So realistically, this would have been yesterday's session low right there. Yeah. Boom. So in any case, you broke clean through there. My point is this: this would be your overnight low then. Sort of your if you're you're a time zone guy in ICT time zones or kill zones, this would be your Asia session. So something like this. So you've got your Asia sessions low. It's going to be my overnight low because I'm in the U.S., right? So something like that. It's going to be my overnight high. Are these areas going for the rest of today's session? Are these areas going to draw the participation that we drew right up here when this thing got shattered? When this previous day's low got shattered? That's a big spike of volume right there. Big one. Are these levels going to generate that kind of volume? You can see we've sort of been during the U.S. session, sort of steady volumes. Are we going to get the big session spike, the volume spike? Probably not. So that lack of volume and participation, T, is going to make those key levels, those intraday levels that we just showed you, probably a little less effective. Now, I'm not saying not to trade them, and I'm not backpedaling on it either. What I'm saying is when you trade leverage and you're trading intraday leverage, you're probably going to trade those levels right there, your overnight highs and lows. Let's say this would be an example of probably a topside resistance level. This is going to be a downside support level, and it worked like a charm. Don't get me wrong. I mean, it worked. My point is this, is when you get involved, do you want to be using the same leverage on an intraday trade, an intraday 30-minute level that has no really significance other than, okay, that's where we ran out of steam back then on the Tokyo Open? Do we want to value that as much as where we ran out of steam for yesterday's session or last week's session or the previous month's session or the year's session? In my mind, no. So multiple time frame analysis. My hierarchy is always long time frames to short time frames. I line them up all on my charts. So my charts have a million lines. So to answer your question, yeah, the stronger and the weak, the longer the time frame, typically the stronger the level. And the reason why is because it's going to be obvious longer to the markets, and it's going to bring more participation. That's what I would say. And that's pretty close to being spot on. Now, take it down to a 5-minute level. Now, here's the thing, though. If you're scalping, I mean, it's a great question, because if you're scalping right here, and you're saying, okay, Shane, but I'm not looking at positions or anything, and I'm going, okay. You made a lot of money right there. If you got down there and you bought 4,022s and you bounced back up to 4,081s, today in the futures market, you made a lot of money. That's a banger trade. Those are bangers. So can you trade them? Of course. Of course you can trade them. But what happens when I start doing this stuff? And I see a lot of this stuff out there. And I don't say anything against other traders. I would never tell anybody how to trade or how to analyze the market. You guys got to do what you have to do. Everybody's got to go their own way. And so what do you have right here? This is a 1-minute chart. This is a 1-minute chart. What levels are important, right? If you're a liquidity sweep person or a spike high and a spike low person, those areas right there are going to be important. So you're going to say, okay, we sort of have some swing highs, 4,081. You know, it worked here. Boom, worked. That pullback worked. Nice big market structure. And then we sort of broke above it. The exact level, 4,080. 4,081. Tremendous volume came into the market right here to drive us there. Then it dried up and we sort of trickled down and down. And then we got a bit of a kick, a bit of a bullish kick. But notice the volumes are very low. So you're still just rising back to that level and then you fall away. And then what happens? You get an area where the volume does pick up. You go up to that level. My point is this, T, on a 1-minute chart, you're looking at this volume without any longer-term key points, whether it's the key levels that I outlined for you today. We're not really sure what's drawing people to the market. Is it really 4,081? Probably not. Probably not. Is it random? Could be. It could be. Remember, I mean, the markets are the abyss. You're staring in there, and you can take anything you want out of them. But for me, I start hearing terms like, "Oh, those are institutional footprints," or "Oh, that's Goldman Sachs right there selling my gold futures," and "Oh, well, here's another big sell-off." Well, that's funny though, because your volume down here spiked, right? But the market didn't do anything. Key levels. Hierarchy, longer term to shorter term. The shorter term that you get, probably the less efficacy the level's going to generate. That's my opinion, but I could be wrong. So I hope that helps a little bit. Universal, good to see you. So yeah, so to give you an example of a strong one versus a weak one, 50,000 in the Dow Jones is going to be a strong one. I would say 4,080 in gold futures is going to be a weak one. I think that's a pretty good example. Let me see. Isaac, how do you identify liquidity sweep areas? Honestly, Isaac, liquidity sweeps I don't particularly believe in them, but you'd say a liquidity sweep is just an area. See these tails? I just look for elongated tails and then big moves. We talked about the God candle yesterday, which you get a candle like this. Somebody would call that probably a fair value gap or a liquidity sweep to the top side. You're just looking for a lot of volume and sort of candles that are bigger than the rest. Honestly, this right here might be, you could consider that maybe a liquidity sweep just because of the tail and you're coming ooff of the high. See, that's a good illustration right there. So what's your key level here? 4,100? Is it important? 4,100. Got a little reversal there. It's enough to make your car payment, believe it or not. Isaac, we have a video on liquidity sweeps, I believe, liquidity sweep trading on our How to Trade Calm YouTube channel. Go ahead and check that out. Like I said, I mean, how do you identify them? There are so many different people have so many different ways and so many different rules. I sort of laugh, but not at them, because I believe that you can make money really any way that you want. Your creativity as a trader is your number one attribute. Don't ever lose your creativity, but what's a liquidity sweep to me may not be a liquidity sweep to you. I would just look for big candles, and I look for elongated tails, long shadows on my candles, and that's a pretty good tell. And usually they're on reversal points as well. That's what I would say. Yeah, I hope that helps too. All right, guys, I'm gonna go ahead and sign off. These live streams have been going way too long this week. I've been going about an hour, so today was tough though, because we had a lot to unpack there with the key levels. But I hope you enjoyed it. If you have any questions at all, head on over to How to Trade. Go in the trading room, join How to Trade. Go in the trading room, click on my picture, follow me, click follow, and then just send me a message, and I get back to everybody in relatively short order. If you have a question, you don't want to do all that, just leave it below this live stream once it gets cataloged to the Switch Markets YouTube channel, and I'll be sure to do it there. All right, guys. Key levels. Long-term key levels on short time frames. Our only challenge is getting enough of them to come into play to make a living, and that's where we have to trade a bunch of different markets and diversify our holdings. But you can do it. It can be done. That's for sure. Absolutely, Isaac. You're welcome. Okay, everybody, have a fantastic trading day. One eye on the news. We're watching for the government shutdown. We'll have updates for you if and when that ends. But remember, CPI Friday, that's the one you want to join. That's going to be CPI Live. And then also tomorrow, we've got another live stream that's going to be across all of our media outlets, all of our social media outlets, and then also in the How to Trade trading room, 1 p.m. Eastern. Don't miss it. Okay, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.